Yes, guys. Hey, this is Rory Burkhart with the Burkhart Realty Group. Thanks for tuning in this week. Today, we're going to be talking about the rise in interest rates and what we're kind of keeping a close eye on this year from the Fed and from the mortgage world as interest rates are on this upward trend. So I wanted to spell this out and bring it back to real world numbers so that our buyers can can understand what we're talking about here. So in this example, I'm using a $400,000 purchase price, okay? And these rates are what they were last week, and they're starting to creep up towards 3.75. They were 3.5% about a week and a half ago. And you can see that this is just principal and interest. Now, taxes and insurance will be added on top of this. But a $400,000 mortgage would render about an $1,800 a month mortgage payment at 3.5%. And you can see as the interest rates continue to rise, the impact that has on you on a personal monthly balance statement. So rising from 3.5% to 3.75, it increases your monthly payment by almost $60 a month. And likewise, as it continues to go up, and we think that we will see 4% interest rates this year, you're going to be at around $1,910 per month versus the close to $1,800. So it's a $110, $115 difference just by that increase in interest rates. Now, mortgages are still really low. Interest rates are cheap, but this does have an impact on you on a monthly basis. And you can see as we continue all the way up to 4.5%, the impact of 1% interest rate increase and the effect that has. It's almost a $250 swing in your bottom line to your mortgage payment. Now, likewise, if you were to be in a competitive situation in a $400,000 purchase and say you wanted to increase your offer up to $420,000, a lot of times that's what we're seeing in today's market. You might need to extend yourself even further. And the impact that would have at 3.5%, if you went from $400,000 all the way up to $420,000, you can see it has roughly this amount of difference. So it's roughly $100 is the impact of $20,000 to the seller's bottom line. For you on a monthly basis, it roughly translates to about $100 a month in difference at 3.5%. And you can see that the ratios extend virtually identically through all interest rates. So the point that we're making today is if you're trying to get aggressive in your planning, and you can see that if you were to spend $420,000 at 3.75%, and that would be around $1,940 a month. And if the rates were to rise and you were to sit tight at $400,000 and they get up to 4.25%, you're going to be paying more for that monthly payment if you wait. So it's a great time to consider buying as we are anticipating these interest rates rising this year. The Fed has announced that it did not make any changes this month, but to anticipate rising interest rates and rising bottom lines so that they're trying to offset the rate of inflation that we're experiencing. So guys, as you can see, real estate and interest rates and mortgages, they can be a complicated process. We're here to help simplify that for you. And even though we're experiencing changes in our market, we're here to serve you, and we are your experts that are standing by and waiting. So if you have plans on making any purchases or selling your home in 2022, please give us a call, and we're standing by to help. Thanks, and have a great day.